Okay guys, what is up? And I am back today with another video. It's Monday and I want to just go over today of how I got this trade on AutoCAD. If you know me, I trade institutional concepts, I trade SMC, order blocks, and gaps are pretty much the only thing that I tend to trade. And yeah, so let's get right into it. So here's how I got this trade, guys. The first thing I do, and I actually have all the steps listed right here so you guys can see. So right here, step one, I identify the news. So when I'm trading, I don't actually just take random trades. I trade based off what's moving, and the news tells me just simply the supply and demand that's going to be happening in the short term. So for example, today's Monday, right? And I knew ahead of time yesterday that, okay, Australia's news is going to be occurring today, high impact, and that means that the market's going to simply be moving for Australia. And so what I did after I got that high impact news, I saw this yesterday, and today it's happening at 9:30, and I was like, okay, well, since there's going to be news and the market's going to be moving, I can look at my one pair that has Australia in it on CAD, and I can actually trade. Oh shit! Sorry about that. Just dropped something. And I can actually um, trade based off of that info, is what I'm trying to say, guys. And so, um, yeah. So once I have the news and I know that all is what I'm going to be trading, I basically just pretty much look for supply and demand. And how I do that is this. So the first thing that I do is I get on the chart, and when I'm on a chart, like right now, I do my trend. So okay, so Australia's moving, so the trend is, I usually use the 15-minute and the 1 hour for the trend. So the trend for Australia right now is bullish. Why? Because the market is moving like this. It's going up, down, up, down, up, down, and that's bullish, right? Because we have a high, right? If we turn the chart to a line chart, we have a high, low, high, low, high, low, higher highs, higher lows, right? Thus, we are bullish. And so those blue circles that you see right there in the screen, um, those blue circles are highlighting the highs and lows that maintain this market structure right here. And so what I do is, once I have my market structure, right, and I have my high and low, and I know I'm buying, when I'm buying, I want to buy like this. I want to buy, okay, so this is my current range. My current range, this is the market structure we're in, and the current range we're in is here, the high and low, right? The high is the top of the sandwich, the low is the bottom of the sandwich. And then if we divide that sandwich in half like this, whenever you're buying, you want price to go low into a dip, right? You never want to buy at the top, because that's where FOMO happens. And yeah, so you want to wait for the market to come down to your demand zone, where price started to have all this high volume, which should be around here or sometimes even here. And you want to expect price to reverse from it and then get into a trade, or enter right on that. I usually tend to enter right on the demand zone. And so if you see two, you simply just turn on the volume chart, and the volume chart tells you which demand zone has the most volume, and that one that has the most volume is the one that's likely to move the most, right? So that's pretty much how it works. So yeah. And here's what I do next. So once price is in my zone and I do my risk management, say I'm entering off this zone, right? The first one, because that one, let's say, has higher volume than the bottom one. So I delete this one and I enter off this one, right? Then I put my stop loss right under where the demand happens. So there's like usually a candle of demand, and I usually put the stop loss below that candle, and then I take profit towards the next high. So the next high right here, or my double top buy side liquidity. So here, that's what I did. We had buy side liquidity. This is buy side liquidity because we had a tap here, we had a little resistance, and we had a tap here. And that's my buy side liquidity, because I target that for take profit, because that's liquidity. Institutions target that because that's where money is floating. That's where stop losses are at. And so it's like a magnet for liquidity. And so We go down to the lower time frames, guys. This is where I actually entered. This demand zone right here, you can obviously see. Sorry guys, you can see it right here. That's the gap slash demand zone that I took. And this is one of the type of trade setups that I trade. I trade two types of trade setups. One of them looks like this, and I have a chart gallery in my Discord full of my trade setups that look exactly like this, what you're seeing with the blue candle. And we have where the demand start. And the reason this is demand because this is where price started to go up from, right? Price started here and it went up from there. And then when you see a candle go like this and there's a gap right there and there's no wick to fill in, that means that there was so much demand in that area that price didn't have time to come back and fill that gap. And so that's why they're called gap slash demand zones. And you can look up what they mean on a different YouTube channel, but that's basically what I trade in order block. So I'm just basically here showing you and documenting my process and what I found today. Basically, I trade Forex and futures. So I trade Bitcoin, I trade gold, and I also for Forex I trade a few Forex pairs like this odd CAD and other pairs like UJ. And I only trade based off what's coming out. So like I said with the news. So for tomorrow, if I go on the other website for my news and we look at the news calendar, we can see that on Tuesday we have Australia news. And so we have Australia and USD news and odd because that's the most hot news, the red news. And we have GBP news, the orange. So in this scenario, I'm most likely going to focus on trading Australia or odd or USD. And I only take one high quality trade setup per day, so I'm not gonna be just taking a bunch of random trades. I'm actually gonna be choosing a high quality setup that I find based off what's moving. So what's moving is the US dollar and the Australian dollar. So that means I have two opportunities to trade, and I'm not going to take two. I'm only looking for one setup for the day, and I'm going to choose the one that's the highest quality that I'm the most confident in. And that's how you do it. You take less trades to be profitable, to actually scale your account, and that's how you build confidence. You don't just take a bunch of trades and do that because that's not how it works. You can't just like milk the market like that. Some people do that, but realistically, in my experience, it's best to take less trades and take the higher ones that are higher quality because that's what actually builds consistency. And yeah, so let me just go ahead and do something real quick. Just go ahead and go back. So yeah, so now that I know that tomorrow I have the opportunity to trade AUD USD, I can just simply go back to the chart and I can look at getting into another trade setup possibly tomorrow or today even because today's I already traded today. 9:30 we have news, so the market will definitely be moving dramatically. It's probably going to move straight up or it can move straight down. Either way, I'm not going to be in the market tomorrow. I'm going to be in the market and I'm going to be trading the result of that news because we also have news tomorrow. So that's pretty much what I did. So I targeted that gap, and then my take profit is always buy side liquidity, and my stop loss is always on the actual candle. I never use a wick as my stop loss. Like if you're looking, I never use a wick right here. I never use that for my stop loss. I always use the candle body because it's more solid, it's more secure as an actual stop loss. And I find that when I'm trading with wicks, it's usually I usually end up having a bigger stop loss than I need to. And so that's all we're doing. We're just looking to get in and out the market and not be in the market forever, guys. And yeah, so tomorrow I have USD news, so I can look at UJ here, and I can look at getting into a UJ setup. I'm so pissed, guys. I missed this setup right here. I could have entered right there at that gap, but I didn't enter there because I was literally not paying attention. I was literally not on the charts. I was doing other stuff. And this is a reason why you want to set alerts, because what happened, I could have actually set an alert right here, and it could have notified my iPhone that, hey, the market is it's at your entry, time to enter. But I didn't do that. So it's important to get TradingView Pro, because when you have TradingView Pro, it allows you to set alerts so you don't miss what's happening on your entries or just general structure. You don't necessarily need to have a trade set up for an alert. You could just have market structure, and you could just be expecting the market to move one way and just set an alert when that happens, just to simply notify you, right? So what I'm going to do is I'm going to simply clear the chart off this, And what I'll do is I'll probably look for a trades up because I think the market is gonna. I think the UJ is gonna continue to go up tomorrow. Um, yeah. So all the pairs that I'm interested in trading tomorrow, I'm gonna drag from my watch list right here, and I'm gonna drag it up. So I know that so these are the only these pairs aren't moving tomorrow. Euro USD, USD is moving, and UJ, USD and UJ is moving. So I'm gonna trading the US part of these pairs, not the Euro or the UJ, or sorry, not the Euro or the Japanese yen. I'm trading the US dollar of these actual pairs. So when I zoom out, this is what I'm going to be looking at for tomorrow. And then whenever you trade for new setups and look for new setups, always delete the chart. See? So then it can be clear, and then you can identify new market data. So you don't. It basically resets your eyes so you can see new setups. So you don't have to look at old analysis, and it trains your eyes to just find new setups. So right now, UJ 1 hour chart, market's bullish. Why is it bullish? We have our current high, our current all-time high is here, our current all-time low is here, and our previous all-time low is here, and our previous all-time high was here, and that all-time high got broken by this new all-time high, which was, like I said, right there. And so whenever that happens, that's called a continuation of structure. And this is how I trade. So I would label this like this, a continuation of structure, if I was doing this right. And that means that the market's continuing the structure, which is bullish. It's continuing to be bullish. Now, if the market were to break to the downside, that would be a BOS instead of a COS, which means break of structure, so a disruption of the trend, meaning the market comes down like this and disrupts the trend right there. So, yeah, right now we're bullish though. So I'm going to be obviously expecting UJ to fill in all the supply right there because the market currently is right here. And that means I basically have all of this potential space to trade, to profit from. And so what I will be doing is I'm going to be doing simple market structure and simple analysis and looking at demand and supply, mainly demand, and I'm going to target that entry right there. So right now, if you look at the line chart, sorry, no, I'll just do it like this. If you look at this chart right here, we had the market was going high, low, right? And then I can switch to the line chart. The market came down, and then what happened here? From being at a low point, the market had start to go up. From being at a low point to being to being and moving towards a high point, because you see that red structure. That red structure represents what the market's doing now. It's kind of disrupting the previous blue structure, which was at a downtrend, which means that the market is going back up. So the break of structure happened exactly right here at this point, and I know it's hard to see because I'm not on full screen. It happened right here at this point right there, because the market was going what? Here the market was going down, high, low, high, low, high, low, and then from this low point, the market came up and disrupted all of this back here. And so that's why that's a break of structure. And so that's a break of structure, and you can put BOS there. And then after that break of structure, the market came up and came down to this demand zone before continuing to go up like that. See? And now I have the potential to look for a trade now. So this demand zone has been already filled, and there's another demand zone down here that I can potentially enter into. But sometimes when the market has so much demand, the market will not actually come back down to fill in. So sometimes the market will go up like this, come down a little bit, go up, come down a little bit, versus going up, coming down all the way, going up, coming down all the way, right? And that's what's happening here. That means that the market is a hot market / high. It has high demand, so it's not always going to fill all the gaps. Like there's a gap down here that didn't get filled, but that's okay because, like I said, when there's so much demand in the market is going to take the most recent gap / demand zone. It's going to take the most recent demand zone versus coming all the way down here to take that gap. So when people are like, what if I find a demand zone all the way down here? You just have to find the most recent one that has the highest volume, which is clearly, just by looking at it, this one where the arrow is pointed to now, because this is where price started to go up from, and it actually broke this other structure here. So this is not a BOS. The first one is a BOS. This one would be a COS, because the structure is continuing from where it broke, which was at the beginning. It broke, disrupting the structure, and now it's continuing that disruption. And so the first is BOS, the second is COS. So it's continuing, and then what you do is you can wait for, let's say, to trade here, wait for it to come down again, and you can enter and tighten your stop loss right there at here. This is another way I enter too. I'm not going to go and make this my stop loss all the way down here because that's too big, right? Plus, we're on the 1 hour chart. So I actually wouldn't even be entering on the 1 hour. I will be going on a 15-minute and doing my risk management on a smaller, on a smaller time frame. So yeah, that's step 2 is structure. And, oh, fuck, my notes got deleted. And then entry, yeah, that's what I just talked about. We did step 2, trend structure, with BOS and COS, and now I'm explaining entry. And yeah, guys, that's pretty much what I did. It's really simple. I'm not going to complicate this and say a bunch of stuff that doesn't matter. I look at the news, which is the economic calendar, and the economic calendar shows me what's in demand, basically, and what's in supply, like what has supply and demand. So to break it down to you, the economic calendar simply, in my style of trading, shows us what is moving, and we make money off movement in the market, right? So that's why I only trade the pairs and assets that are actually shown to be moving on the economic calendar, which is why I won this trade, because odd is a market that's currently moving, and so I expected the market to move, and it's moving. That's why you could expect to have a higher win rate when you trade according to the economic calendar. But yeah, guys, I hope you guys got this written down, and I hope you guys can, if you guys have any questions, go ahead and ask me too. I can answer them. But yeah, peace out.